Assalamu alaikum everyone, this is Mohammed Sohrab and you are watching Wolf Sage Virtual Learning, and today we will study about financial reporting and analysis. So let's go to our today video. Okay guys, during this course we will study two key topics. One is financial reporting and second is financial analysis. So let's discuss each of these topics separately. First is financial reporting. So let's discuss what is actually financial reporting and why actually we prepare financial reports and what is our objective of preparing financial reports. So according to this definition, financial reporting refers to standard practices to give stakeholder an accurate depiction of a company's finance. So what actually this definition tell us? This definition tells us that financial reporting means standard practices and rules regulation which were followed by a company so stakeholder can get the accurate information about the company's finance. So what is our objective of studying this course and what is actually the objective of financial reporting? The main objective of financial reporting is to build the confidence level of our stakeholders so that they good to know that whatever they are reviewing about our company, it is standardized. It is standardized and there is no misleading information uh, contained in these reports. So what kind of information stakeholder required from our company's financial reports and what kind of information our company's financial reports provide to our stakeholders? These information includes assets, liabilities, revenues, capital, cost of goods sold and expenses. Each of these KPIs are so essential because they demonstrate about the company's operation, how company is operating right now and how company will operate in the future. So all decisions are being taken on the basis of this information that is available in our financial reports. So it is so essential that our financial report should be according to the standardized practices which were followed by many countries and which were developed or built for the purpose of standard accountancy, to standardize the profession of accountancy. Furthermore, guys, many of you may know that financial reporting is necessary because it's legal requirement in many countries, but many of you may know not that what is its potential and power, how it can play a vital role during financial analysis. So we will study in later on classes what are the requirements to build to prepare a standardized financial report. So let's go toward financial analysis and what actually financial analysis is. Financial analysis will introduce you to method of financial statement analysis which allow you to use a company's financial reports to, to identify its strength and weaknesses. So being a company's analyst, being a financial analyst, what actually we do in financial analysis, we use a company's financial statement to identify how this company has performed in the past, and on the basis of that data we will also review how this company will perform in the future. And furthermore we can also identify how what are the area of improvement and what are the area of risk. Furthermore, how the past decision has affected the company's current position and how we can avoid to take such decision. So this is what actually we will study during financial analysis. We will see different methods which were used during the financial analysis, like common size statement analysis, DuPont analysis, financial ratios. So different analysis we will perform during this course to review a company's strength and weaknesses and what are the financial health of a company on the basis of those different analysis. In simplest word, we can say that Financial analysis means using a relationship among companies number and to gain insight about the company's operation. So during this course, as I said you earlier, we will use different analysis. We will use different methods of analysis, and on the basis of those analysis, we will study how the company is operating and what are the area of what are its strength and weaknesses, and how we can improve our weaknesses on the basis of our strengths. So all these things will be covered during this course. The accuracy of financial analysis, it totally depend on the accuracy of financial reports. If we have adopted proper standard practices, and then we will have an accurate depiction of a company's finance. So when we have accurate depiction of a company's finance, on the basis of that our analysis will also be accurate, because we perform all analysis on the basis of our reports. If we have accurate reports there, if our reports doesn't contain misleading material or material, then our analysis will be as accurate, because we perform every analysis on the basis of those reports which were presented or published by different companies. So guys, what actually we learned here, we learned that we should have accurate information and we should have standardized financial reporting. So let's discuss how we can make our reports standardized. Guys, in many countries, our decision makers like investors, board members, and executive directors have fully confidence in a financial reports of a company. But that would not happen in many countries, because there are many pitfalls associated with financial reports. Some of these pitfalls are technical pitfalls, but others are ethical pitfalls. So the question that arises here, how we can overcome such pitfalls and how we can make our financial reports standardized, so that we can build the confidence level of our investors, our board members, our executives, so they make their decisions accordingly. Here are three ways which we can adopt to standardize our financial reports. One is by following GAAP, and then second is by following IFRS, then third is following IASB. These are different rules, regulations which were followed by top organizations, and these rules were built to monitor the profession of accountancy. So if we adopt their rules, whatever guidance they have provided regarding preparing reports, recording our data in our reports, then we can have standardized financial statements. So let's discuss about these different authorities, and these different rules, principles that were followed by many countries, they they monitor the profession of accountancy. Let's discuss what is actually GAAP. We will have detailed video on GAAP and what kind of rules they have developed for the profession of accountancy. Right now we will discuss it briefly. So what actually GAAP is? GAAP is generally accepted accounting principle. These are common rules followed by many countries for standard financial reporting, and first these rules were introduced by US Security Exchange Commission, but right now these rules were followed by many countries, and they follow their guidance and they prepare their report accordingly. So the second is IFRS. IFRS stand for International Financial Reporting Standard. These rules also initially introduced by US, but now these rules are being followed by more than 110 countries, and they follow their instruction for preparing financial reports. Then third is International Accounting Standard Board. It has also contributed in the development of IFRS and GAPs. There are many contributions from International Accounting Standard Board. They also developed some rules that were related to profession of accountancy, and all these rules are being followed by many countries, and these rules guide different companies to how to prepare standardized financial reports. And once a company prepare their reports according to GAAP IFRS, then their reports are considered as standardized reports. So guys, another question that arises here: why actually we required financial reports, and why actually we standardized our financial reports? Let's discuss why actually we publish our financial reports and why we required financial reports. It is a common phenomenon that many companies publish their financial reports because it is legal requirement, because government enforce companies to publish their reports so that they can check whether they provided their taxes according to their uh, earned revenue or not. Furthermore, government is also responsible for general public interest, so that's why they ask companies to publish their financial reports so that to avoid the risk of fraud, to avoid the chances of misleading information that could uh, broke the public interest. So this is one of the reasons that why actually we required financial reports and why actually it's a legal requirement. Then another reason of publishing financial report is investor requirement. If you are considering to invest in any company, definitely you would require reports. You would require its financial reports so that you can check whether this company has performed, how this company has performed in the past, and what are the area of improvement, and how this company will perform in the future. So whether you should invest in this company or not, what are the assets of this company, and how many liabilities company have to pay. So these are the different things that investor required before investing in any company. So this is our second reason why actually we publish and why actually we required standardized financial reports. Third reason of publishing financial reports is better requirements. Definitely, if you are lending company and another company is asking you for a loan, then you will ask them about their financial position, about their financial health and financial position. One can see the financial health and financial position of a company through its financial reports. So this is how and why actually we publish our financial reports, and this is one of another reason that's why we require standardized financial reports. So the objective of this uh, session was to introduce you all about the importance of financial analysis and reporting. This is one of the advanced course in the field of finance. So in hopefully you guys will watch my series of videos that I will upload on this course, that is financial reporting and analysis.